Hi everyone and welcome to today's morning report on Monday the 5th of October with me, Rich Pro Market Analyst at Tech Markets. European trading sessions got off to a storming start. That basically happened pretty much as a reaction to Friday's big turnaround on Wall Street. The initial reaction to those payrolls data was fairly negative, but then as the session went on in towards the close, there was a big turnaround in sentiment due to the fact that I think the market is just reassessing what's going to happen now in terms of interest rates in the States. It doesn't look as though the Fed is going to be able to, well, certainly October's off the sort of the menu, but it looks like potentially even December as well now could be called into significant doubt. So the market has taken that sort of dovish implication from that non-farm payrolls report as strong for equities, and risk sentiment has pretty much across the board rebounded. How long it's going to last for remains to be seen, though, I would say. But let's look initially at the dollar. There's obviously been a dollar weakening. That weak data is certainly, as I said, questioning the potential for a rate hike, which puts pressure back on the dollar to the downside. So that's why we're seeing the dollar falling today. In terms of Treasury yields, spiked lower quite strongly on Friday, and they started to sort of rebound, as I said, into towards later on in the session. But, and I say this, but the yield curve in the US is now significantly flatter than it was before, pretty much across the board. That's the 2-year yield, which is strongly lower, and not massively reacted on in terms of the bounce. So this rebound in equities sort of leads me to sort of ask the question: how sustainable is this move? Certainly, if Treasury yields are not sort of pushing up all that much higher, so that is a concern on my part for the longevity of this rebound in sentiment. But still, we have got the VIX, which was sharply lower on Friday, back towards 21, and as I said, the equity markets are strongly higher as well. Helping that sentiment probably is also going to be the oil price. This oil price has been on WTI. It's been still in this range. It's started to fall back towards the bottom of that range, 43.20. But on Friday there was a big drop in the Baker Hughes oil rig count, and that helped to support the price, and it's continued to push on today. So that is again a bit of a sentiment gauge for equity markets. In terms of risk generally on forex, we're having the euro, which is strengthening as this dollar has weakened. We're also seeing the yen the yen weakness as risk appetite has improved, but also the commodity currencies as well have been pretty much bolstered by this news on Friday. So lots going on in the markets, lots of reaction, lots of volatility still, and the market's still trying to, I would imagine, settle down and take a full stock of what they're taking out of this payrolls report. But what we've got to look forward to today, well, we've got the services PMIs, and we've had the UK data out, which really was a disappointing number actually, and that's been a big drag on cable lower, 40 pips down on that cable, as that UK services PMI disappointed at 53.3. And now we're sort of looking towards the US data into the afternoon. US PMI 57 the ISM non-manufacturing data 57.7 is the expectation there, and it'll be interesting to see if it can maintain that move, because that's still a pretty strong number for the States. And don't forget, at the moment, and I say at the moment, bad news is good for market sentiment. So that takes me on to my chart today, which is a forex commodity currency, which is the Kiwi, and we've seen this improvement in the Kiwi momentum in last few weeks. I have talked about it before, and it's now looking as though it's improving quite significantly, because we've had this initial break and close above the 64 figure resistance that I was speaking about, and now today we're testing the 65 resistance, big figure resistance there. But look at this momentum. The RSI is now the highest since April-May time, and it'll be very interesting to see if this is a sustainable improvement. What I need to see on a medium to longer term basis is the RSI pushing above that 60 point, because that's where the sort of rallies got to in March-April time before the sharp sell-off again. So we need to see, I think, a move above 60 on that RSI. Look at the MACD lines as well, still below neutral, so there's still work to be done in this rally. But as we speak, the Kiwi is strong. Now in terms of near term on the hourly chart, we've seen this move in the last couple of days, very strong to the upside. Needs to now, I think, post a pretty decent higher low on this chart. That support comes in now around that breakout point. Look at that breakout at 64.50 on the intraday hourly chart. Big resistance there, broken to the upside, so that becomes now supportive. 63.80 is a key reaction low from Friday, so there's sort of 70 or so pips of support there on the Kiwi between sort of 63.80, 64.50 now to sort of start to bolster the outlook, which is improving at the moment, and it'll be interesting to see if it continues. But certainly if it can close above 65 figure, then that would certainly be an indication of the improvement, and it would theoretically then reopen these highs, 67.07 which was the August high, and 67.38 which was that high in late January. So this Kiwi is improving, but whether it can sustain the move remains to be seen, but decent support still just below. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.